Hey, Rebel Bankers, it's your host, Chris Noggle, and welcome back to the Real Estate Money School. I'm so happy you're here today, and I have a really special guest. I have Mark Kenney here from Think Multifamily. So we've been talking about this multifamily thing a lot, and we've been talking a lot about how money plays a part in that, and that's exactly what Mark does. He runs a large multifamily company, and what I mean by large is about 4,300 units. And what we're going to do is we're going to talk a little bit about Mark's journey. We're going to talk about the things he had to overcome in the beginning to get his first couple deals done and how money and life has played a part in his journey up to where he's at today. And I want to talk a little bit about all of you and your journey to becoming a Rebel Banker. So we talk about this all the time. We talk about money and how money's a hurdle, and everybody wants to say, when I get money, I'll do this, and when this happens, I'll achieve that. But you got to just take action. You have to understand that money is not the problem. The economy isn't the problem. The problem is you and your mindset and also the knowledge that you get. And that's what I hope to bring to you with each one of these episodes is a new light of other successful real estate investors' journey and how they've done it so you can see that it's not just an easy road and you can learn from that. So with that being said, and I always say this, it's never about your actual resources. It's about how resourceful you can be. So let's get your journey started to becoming a Rebel Banker, and you got to get started now. So take that leap, grab a copy of my book, The Private Money Guide, and let's jump into this with Mark so you can hear a little bit about how somebody builds up to 4,300 units. So Mark, welcome to the show today.
Thanks, Chris. I'm glad to be on.
All right. So what I'd like to start with, and I'd like to kind of take a little bit of a look at where you're at today. What does your business look like today? What are you doing? And just tell the audience a little bit about yourself and kind of where you're at today.
So I'm in Dallas, Texas. That's where I originally started buying a little bit larger multifamily. We try to focus on 100 plus units as a general statement. And, but Dallas got pretty tough as far as deal flow and good deals, I should say. So we started looking at other markets as well. So we're in 5 states now, or multiple markets. We haven't bought in Dallas in over 2 years, but we bought several properties in Texas still. But we're also in Georgia and Florida, Alabama, and Tennessee. So Southeast and Texas, pretty much primarily where we're at right now. So we've been doing that. And we also have an educational and event that we do as well, trying to help educate other people about multifamily and really kind of share some of the experiences we've had and hopefully prevent some people from going through some of the tough lessons we went through.
That's awesome. And your company's at 40. How many people do you employ? Like you got 4,300 units. What does that look like? What is that like every day having that many units? What do you do?
Yeah, so we use third-party management. So when we did smaller properties, we manage ourselves. Now that we have larger, we have a third-party management company in the different areas that we own. So they have staff and we pay for those staff, of course, but so we're not having to really handle the day-to-day evictions and maintenance and things like that. So it's not much. As far as the business side, we have like a half a dozen people that help us various aspects, but that includes the educational piece. My wife, Tamil, handles, pretty much the marketing and event coordination and all the things that I'm not good at all and don't really, I shouldn't be one doing it. So she does that. She loves it. She's great at it. So we're able to do it pretty small. We have some back end people but a lot of it's around trying to build the brand and trying to attract either passive investors for deals that we have or secondarily people into our educational group.
That's awesome. So you don't get to 4,300 units without some trial and error. So let's do this. Let's take a trip back in history. Tell us a little bit about what it was like. How old were you when you got started? What was your first deal like? And then how does that progress?
I'll start with, I was 22 as a senior in college. So when we got our first deal under contract, it just a duplex. Really didn't know what I was doing. My identical twin brother and I said, hey, you know what? There has to be a better way. We didn't have any, an uncle or a parent or anything to mentor us or even push us in to be entrepreneurs. But we're like, hey, it makes sense. People need a place to live. So we started looking at, multifamily, small. We had to work within the income that we had and We didn't know what syndication, as far as raising capital from other people, didn't even know that was. And that's where we kind of started. So the first one was a duplex. Actually, we had a duplex under contract, and then my dad talked me out of it, and I was 22, so I'm like, okay, he scared me. So I got out of the contract, unfortunately. And then shortly after that, we got another duplex and didn't tell our dad till after we closed the deal that we got it. That way he couldn't talk us out of it. But that's kind of where we started. But I was working full-time as a CPA. And then I started doing IT consulting, had an IT consulting business. I started in 2008 and continued to buy small multifamily. Definitely not enough to support, the income that I needed to live and things like that. And then my IT business was doing pretty well overall, and I was working, literally minimum 80 hours a week, and really caused a lot of issues, family-wise. I ignored my wife, and it came to a head in 2013, and kind of like, I need to do something different or else, essentially. And so we said, well, we can't really keep buying small properties every 2 and 3 years and then expect to retire or leave and live off that income. So we said, well, why don't we? One of our friends was doing a syndication. First time I really heard about it, and raising money from other people. We said, let's go talk to him. I invested in his deal passively first. That's how I got started. And then went to an event and met some people there and things like that. And that's kind of how we got on the road of, hey, we need to start looking at larger properties. And, it took us about a year to get our first deal. I mean, of course, I was working still like crazy, but it just took a while to get our first deal. And the first deal was a 64 unit. And then we just kind of, from there started buying 100+ unit deals after that. Biggest deal we did was 454 units. And then that's kind of how it wasn't easy, like you said. There's definitely some trial and error. And reality is we haven't done it all by ourselves either. We have people helping us in different aspects of the business and a team in place. Frankly, it has taken us quite a while to develop the team. And now you kind of burn through, unfortunately. I know you do, some of the single family too. If you have a contractor, you might burn through a couple of contractors before you find the correct one that you want to use. Unfortunately, we've had the same experience, whether it's a management company or contractors. And now we feel like in the locations that we're in, that we have good teams in place that we can rely on, trust, and things like that.
That's awesome. So during this whole thing, so that's great. How did the money work in the beginning? Like your first couple deals, I mean, did you go bank financing? Where did the money come from? And then, you kind of escalated and you started going up into these bigger units. How are you structuring those? I know you're doing syndication, but when you weren't doing syndication, how was the money piece? Like, where did you get the money and all that? Because that's really the meat and potatoes of what stops people from doing what you've done. Yeah.
So the ones where my brother and I bought together, the first property I bought was $32,000. So very, for a duplex.
That's
cheap. Some rehab.
That's
and
even cheap
like
by Buffalo numbers.
This was literally 26 years ago.
Okay.
A long time ago. So we had some money from working and things like that we saved up. The down payment wasn't much. We did get a loan through a local bank. And it's just our money as a down payment and things like that. It was recourse, meaning we had personal liability, which frankly kind of freaked me out a little bit. We weren't making much money, and if something, if one or two of the units were vacant for a while, it was kind of a big deal to us. So we went to the bank, put our own money down, and that's kind of how we got it. I don't remember the terms of it, but we didn't probably have to put more than, maybe, I think we put 15% down, if I remember. Below $10,000 all in.
So that was your first couple, but then how did you start buying bigger units? There was kind of the same thing where you're using your own money for the deposit and banks?
No, for the 2 to 4 units, yes. And then the first deal I mentioned where we got a 64 unit, I had an IT business, so I had a number of contacts that were in the IT industry, and most of them do, pretty well considering, and just had some relationships that way. And then we had gone to some meetups and events and met people, and we did a good job initially following up. So a lot of people go to events. We have events too, and people go there and they spend the entire weekend. They spend money going there and, 2 days of their time, and then meet people and never follow up with them. That's a waste, right? I mean, you need to follow up. Not everyone you follow up with is going to turn into something that, is a business transaction or anything like that, but you have to follow up with people. You spend all the time going there, right? Doing that. And I was petrified to raise on my own. It was about $1 million raise, which is a lot at the time. And I was an IT guy, CPA. I literally had to ask my dad that I remember my entire life 2 times for money. That's it. So for me to go out and ask other people for money, you're not really asking for money. I mean, you really are. I mean, it's hard at first because you have $1 million you have to get. You kind of want to get it however you can, but you have to really take a step back and always do the right thing. So if someone shouldn't invest in the deal for whatever reason, you need to tell them that. A lot of our investors, I've recommended they put less amount into a deal than they put in and things like that. So, but it's really kind of getting out there. I shouldn't say, it's very difficult sitting at home trying to build an audience of investors. I'm not saying you can't do that, but it's hard. You kind of have to get out there, meet people. I just met someone earlier today. Lots of times it's face to face, and so people can kind of see you. And lots of times they need to see you more than once. We go to other events and we sponsor events too, but the first 1 or 2 that you go to, the first 1 or 2 years can be slower, and then all of a sudden you start getting momentum because people start seeing you over and over again, and they're like, hey, this guy isn't going anywhere. But I would say you have to, if someone says, hey, I have a rich uncle or a rich, whoever it is, that's great, but you can't rely on one person. Or someone will say, hey, I have a list of 20 contacts I could reach out to about raising capital. That's not that many unless they all, have money laying around, and the timing, someone says they're interested in a deal, timing comes up, oh, I'm not interested, or life events happen, whatever it might be, medical or divorce, and they don't invest. So you really need to build your list. But also, you can do that remotely too, by giving something of value to other people. So if you have blogs or maybe a 10-step checklist or something, you don't have to be an expert in everything. If you learn this business enough, you can start putting some sort of document together. It doesn't have to be long. End of the day, social media is useless if you don't have people's email addresses. I mean, I literally know a guy had over 1 million people on YouTube, following him. He got cut off from YouTube forever. He doesn't have access to those people anymore at all. So you want to give something of value, and end of the day, you want someone to be able to give you their email address. Don't ask them for, a bunch of information. Hey, I have this. Maybe give them the first 3 steps, and there are another 7 steps, and say, hey, if you're interested in hearing more or learning more, click here, and then they can give you your email address and automatically email those, whatever the steps or whatever it might be. So give people something of value, get out there at events and things like that, meetup, start your own meetup. It's easy to do. And then people see that you're adding value to them, and that means a lot to them. They're going to come to you as a kind of an expert.
That's very good stuff. So you had mentioned also that you put events on. You have your own events now?
We do. So we have different events we do. It's all related to multifamily, and we call it the Fire Summit. It's all about trying to learn how to do multifamily, different aspects of it. We have a lot of different speakers that come in as well. And then we have a deal analysis class that we do, and you bring your computer for 2 days, and we work through deals together. So there's no fluff or anything. You're working through deals. And our whole goal has been, there are certain aspects of the business that are harder for people to pick up. We have 14 steps to our process. We obviously didn't invent multifamily investing. We have our own spin on it and things like that. The 2 hardest steps that we've seen from coaching other people too, we have a coaching business, is raising money, which we've been talking about here. And the second one is deal analysis. And some people pick it up quickly just because of their background, they're an engineer, or they're IT. Other people are really scared about it and think they can't get good at it. Everybody can get decent at it for sure. You don't have to necessarily be the expert or even like it, but you need to know enough. How do you go invest in a deal even as a passive investor if you don't know enough to at least look at a deal and say, does it seem like it has merit or not? If you're sitting there guessing, that's not good. You're putting in usually, $50,000 to $100,000 of of your money into each investment. You need to understand how deal analysis works.
Yeah, that's absolutely true. And one thing you said a little bit ago, at age 22, you had mentioned that you had this property under contract, your double, and your dad scared you out of it. And I relate to that because I've heard it a lot, and it's also been part of my life where, people in your life constantly, and people that don't know the business, but they constantly come into your life and they say, oh, you shouldn't do this. They scare you. Oh, I heard bad things about that. Oh, you're going to lose all your money. Kind of like that movie. You're going to shoot your eye out.
Yeah.
But, what was that like? You're 22, you're just getting your first double and you're excited about it. And then your dad scares you. Like, how did that affect you?
It brings back memory. I literally know where I was actually at college. I drove home. I know where I met my dad at this restaurant called Hardee's. I know exactly where I was sitting. You're talking 26 years ago.
Yeah.
What time of day it was. And I remember just thinking to myself, he's trying to protect me for one, which in his mind he was, but I was like, man, I just feel so stupid. This was my one thing. We've been looking for properties. So we spent a lot of time, and I'm like, am I ever going to get one now? And, is this even, the whole thing about trying to start buying real estate, kind of a, dream, if you want to say, my brother and I had, might not even ever become reality. And, so it had a big impact, but end of the day, it didn't hold us back as long as I probably would have thought it would have, because a couple months later we got a deal.
And I like that you said when you got that deal, you didn't tell your dad about it till the end. And I wonder
we used to have him come on all the property, tour the properties with us and things like that, and then we just stopped doing that.
Yeah, I don't blame you. I don't blame you. And it's funny because I can relate to that so well. And I know so many people that I talk to because, obviously we have a RIA, we have all the meetings and everything. And I see people all the time that say, oh, this person said that wouldn't be a good idea, or this person said not to do that. And I think back to 2008 when the whole market crashed and I got caught in it in a really big development deal I was doing, and just everything around me was dying. Like my retail stores were plummeting. My financial advisory business was screeching to a halt. And I'll never forget, at that point when you're at that low moment and you're sitting there and you're just looking for that opportunity, that one opportunity that'll catapult you into the next phase of your life or catapult you into the success that you're looking for. And then all of a sudden you find that, right? That opportunity presents itself to us. And then we have to make decisions in life. We have to make a decision. Am I going to listen to these people? Am I going to listen to the voices inside? Because sometimes the voices inside are the worst ones. And
right, exactly.
We have to make that decision, and we get excited about that opportunity. And I remember mine was a 3-unit. It was just a 3-unit downtown Buffalo, and I remember I was so excited about it. That was my opportunity that was going to pull me out of the mess that I was in, and it was perfect. Everything worked. It was in a great area, an appreciating area. It was fully occupied, rent roll positive, and I was just like, this is that thing I need. And then I got home, and I'll never forget, then fear sets in, and you start thinking about it, and you're like, is this really the opportunity I want? What if one of the tenants moves out? Where am I going to find the money for this deal? And all that stuff circulates, and then all of a sudden you talk yourself out of the deal. Well, my story with that deal is I did talk myself out of it, and 4 years after that point in time, I remember I was driving down there and I saw the building. It looked totally different. Someone else had bought it, renovated it, and I'm like, wow, holy cow.
Could have been you. Yeah.
That could have been me. I should, I could, I woulda. And I came back and I remember I dove into the deal and I said, what does this look like? That deal that back then I could have bought for $160,000 at that point in time was worth about $400,000. Today it's worth over $1 million. That whole area is transformed. So literally, like to put that in perspective, I talked myself out of almost $1 million.
Yeah.
And I could have done that deal, but that voice inside talked me out of it. And that same thing almost happened to you when your dad, kind of said, you shouldn't do this. It's scary. So I do that. And I tell that story and I pulled that out of you because that's so true for so many people. How many?
Yeah, it's who you're listening to, right? Yeah. I mean, reality is my dad had no experience. He's 82 now. He's never bought a rental property in his entire life. I was listening to the wrong person. I didn't really have anyone else as far as a mentor or anything like that or a coach. But, what did he, he had more years that he had lived than I did, of course, but he didn't have experience with that. So reality is, like I said, I was simply listening to the wrong person.
Yep. But I think a lot of people do. So that's important. And I'm glad you said that, because I think a lot of people need to hear that. They need to hear that look, that one moment in your life at 22, that could have like stopped you from doing everything you've done. That could have stopped you from owning 4,300 units, having an education in an events company. I mean, what would your life have looked like? I mean, would you have still been working 80 hours a week in IT? Would you still have the same wife? Would she have put up with that? I mean, literally, like, sometimes you got to reflect on like the what if, and you didn't, thank God. But so many people stop 3 feet from gold and they don't ever get there.
That's exactly right. And believe me, we wanted to. I've wanted to before. I mean, numerous times. It no matter, it doesn't really matter what you're doing in life, whether it's real estate or, whatever, fitness or whatever it might be, is if you have goals, you're going to try to reach them. You know what reality is, you might not reach all your goals, but if you don't have any goals at all, you're just going to be stuck where you're at.
That's it. I love it. So let's get a couple more things. So when you were doing this whole thing into real estate and you had your IT job, working 80 hours, you had to make some decisions, and you also had to overcome some obstacles along the way. So what would be like the number one external obstacle that you had to overcome in your journey?
External obstacle. I would say, I don't know if you consider it external, but it's really just more the credibility in the marketplace. We were just starting out. So, I mean, it's an internal thing because, it was related to me, but we didn't have externally a reputation in the marketplace that we could close deals, or that we were easy to work with, that were reputable or anything. It was, hey, you're just starting out. IT guy, CPA, has nothing to do with real estate. So we had kind of overcome and build those relationships with brokers, because most of the deals we get are directly from brokers, even though a lot of them are off market. We had to build those relationships and try to build credibility with them.
And I think that's really important, because the credibility without that, also you pulled in kind of an external, because that's a real external obstacle, is the credibility, not having that name. But then you also took that external and you brought it internal, and you were thinking, wow, can we really do this? Nobody knows us. We don't have that credibility. So that's almost an internal and an external obstacle. And you just, how did you overcome it? Did you just keep pushing through it? Just keep doing it?
I think reality is, we met with brokers. We always did what we say we're gonna do. So if you do what you say you're gonna do, and a lot of people don't, and be easy to work with, and people are talking to you, if you lose a deal, all right, maybe we'll get the next one or whatever. I know people that start out, they don't get deals and things like that. They start getting upset with the broker and being frankly just rude to them and things like that. Always having that mindset that it's a long-term perspective and you treat it that way. But we just kept meeting with brokers, kept touring properties, would tell them why a deal works or doesn't work, so they weren't trying to guess what we were thinking. And that's kind of how we really did it. And once you got started, then it was easier to get credibility in even other markets in other states, because we would rely on brokers, for example, in Dallas, to make introductions with brokers in other states. And they would kind of build you up and things like that. So that way, if we go to another state, we're not trying to guess who to talk to in the marketplace. We're going directly to the guys that people here are recommending. And that's how we've been able to get in multiple states.
That's awesome. And then you kind of already hit on an internal, but would you say there's any one internal obstacle that you've had to face the whole time?
Yeah, the biggest one for me would be related to money raising. Probably at first, I didn't really understand that, I'm really presenting an opportunity to people, and whether they say yes or no isn't necessarily a reflection on the deal. The deal could still be a good deal, isn't a reflection on me as a person. A lot of reasons why people may or may not invest in a deal. But I was very, very fearful of trying to raise capital. We still get, we've raised a lot of money, we've done a lot of deals, but I still get nervous when we raise for deals. I do. I think you should, frankly.
Yeah, I agree.
Because there are potentially unknowns that you can do all your due diligence, you can do all your homework and engage all the experts, but you're buying a business. Some of these properties are 1960s and 70s and 80s. something could be there that you just didn't find, even if you did all your due diligence. So there's always that little bit of a fear factor piece. But for me, without a doubt, a lot of the other things, I don't say came easy to me, but, broker relationships and analyzing deals. I mean, I have a, background in finance, things like that. That came easy to me. Understanding contracts. My IT business, I did a bunch of contracts. So contract negotiations came easy to me, but really the raising capital was the biggest fear I had.
Yeah, that's a lot of people. I mean, a lot of people don't want to talk about money. They're not brought up to talk about money. It's just not something that in society is something that's easy for people to do. Everybody's kind of dodging that. And then all of a sudden when that money raise and you having to come out of your shell and start talking about it and presenting opportunities to people to raise money for your deals, that's the difference between your success and your failure. I mean, it really is. Right. You can't raise the capital. I mean, you wouldn't have gotten where you are.
Oh, yeah.
You can't do it without capital. And the biggest thing, here's a big takeaway that I got a long time ago from somebody is, when you're looking for money for your opportunity, for your deal, you have to understand that you might be nervous of asking for money, but that person needs you just as much as you need them. You hold the opportunity to solve their problem, and their problem is they want to make more money. So if you can solve their problem, then they in turn will solve yours. You got to start thinking about how much you have to change their life and how much you can help their life and their investments and their finances. And once you focus on that, you focus on them and how you're helping them, raising money becomes a lot easier because you stop focusing on that fear of oh my God, I need money. And I don't want to ask. So don't ask. Solve the problem. Present them the opportunity and let them react. And then, hey, if they give you any pushback, then just do a takeaway. Be like, okay, well, maybe it's not the opportunity for you. When we find one that fits your needs, we'll bring it to you. And then, oh, no, that's not what I'm saying.
Yeah.
No, but yeah, it's that mind.
I think it's great, Jim. I love that for sure. And then if someone does say no, or, it helps you learn too. I mean, every time I know probably 99% of the questions I'm going to get asked about any deal. And you'd have answers for those. One of the easiest ways that we found, especially through our coaching, is for people to raise capital is to their first time become part of the general partnership and raise money for somebody else's deal that already has a track record. So you're not starting out by, if you go to people and say, hey, I'm buying this, 100 unit property, and what's your experience? Well, I've never bought one before, versus saying, well, I'm on a team. We have several people on the team. Team members have, X number of units and things like that. But also investing passively, is a good way to get started. That's where I started, and you can start building your track record that way. Let's say you invest in a couple hundred units. It's true to say my partners and I own 200 units. It's a totally true statement. You're a limited partner in that deal. So you can start building your track record that way as well. It'll take time for sure. You'll get frustrated and be disappointed and things like that, but just stick with it. I mean, something you really want, stick with it. It's not a mystery how people are becoming successful. It's being easy to work with. It's giving value back to somebody. If you have nothing to give somebody, unfortunately, you're going to have to find a way to give back to other people, because people don't want to bring you on necessarily just because you're a nice guy. You have to add value.
No, that's exactly it. You have to provide value. That value you provide, that's what's going to make it happen.
That's right. And there are a lot of ways to do it, but people think that you have to provide value through having money and things like that. There are a lot of ways. You can become good at finding deals, or good at deal analysis, or good at raising capital. You don't have to have two nickels rubbed together to be good at any of those things.
Yeah, it's like I said earlier, it's not always about your actual resources. It's about how resourceful you can be. And I don't always mean how resourceful you can be for yourself. How resourceful can you be for someone else?
That's exactly
what value do they see in that? I mean, it's just such a vast thing, but it all plays into the same end goal for everyone. Yeah. So Mark, if people wanted to get a hold of you, how would they go about doing that? Like if they wanted to learn more about what you do, I mean, do you have any events coming up? Is there anything in the future for the events?
We do. We have one in September. It's on our website. It's Think, which is THINK, multifamily.com. That's our Fire Summit. Walk you through all the different various steps of multifamily investing, lessons learned, things like that. And then we also have, in November, we have a deal analysis class where you bring your computer and work through the deals together for 2 solid days. And then my email is Mark, M-A-R-K, at thinkmultifamily.com.
Oh, that's great. So everybody, if you're interested in learning more about how Mark did it and how they do it as a company and get educated on this multifamily space, which has been, the big rave. You're hearing a lot of people talking about it. Flipping's becoming a little bit more difficult. The margins just aren't there. So people are turning to the holds, the long holds. And, you can either do it with singles, doubles, and quads and, build your portfolio that way, or you can go into the big multifamilies, the syndication, and you can learn the right way to do it, which the thing with this stuff is there is a barrier where you need to learn and be educated and probably coached to learn to do this right, because it is more difficult. There's a couple things that you must know to do this properly and legally. Otherwise, you're going to get yourself into some serious hot water. So why not learn from people like Mark and his team in doing that? So go to his website, thinkmultifamily.com, and check out his events. And if you can't make the first one, I'm sure they have other ones that they're doing, but absolutely try to make that happen. And with that being said, I thank all of you. I hope you all got some golden nuggets out of this. And if you did, make sure you let us know what you think of this, and send us a comment or send Mark some comments about what you thought of this particular episode. We'd love to hear your feedback on what you're trying to do. And I'm most concerned about your journey and your journey to becoming a rebel banker. So why wait? The worst thing that can happen is you can wait and put off what you need to start right now. So stop focusing on what money you have in the bank. Stop focusing on where the money's going to come from and how it's all going to work, and just start getting resourceful and take that leap. Once you take the leap, you're committed, then things will happen. And that's what you need to do. So stop thinking and start doing more and working to be more. So with that being said, thank you all for joining us for another episode of the Real Estate Money School. And we will see you guys all at the next episode.